Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right, Affirm. We just got done with holiday shopping season. We should expect some pretty good numbers here in the buy now, pay later space. You guys have been pretty positive on this stock recently. Had a little slump in the summer. Do you have the data that backs up, the levels that we're seeing now?
Yeah, I mean, if just start by looking at the stock itself. I mean, it's been on an incredible run. In fact, if you look at how it's done since the lows, and I think it was August were the lows of this year, it's almost tripled. It had a good report last quarter, but it sold off initially, and then it's up about 20% since then. So I would say that expectations are high, and justifiably so. They've done a great job of legitimizing their brand and really differentiating themselves from all the other buy now, pay laters out there. And one of the things that they've done is that Visa flexible payment partnership that really does legitimize them. And when we look at the data, it's incredible. There's a stark difference between them and their competitors. Just looking at the web visits, I mean, I think they're up 24% on a year-over-year basis, and everybody else is going the wrong way. It's really wild. You don't see this very often. I mean, normally, if you told me that those three were to the left, I'd say, oh, this is a tough climate for buy now, pay later. Affirm is probably not doing well. And of course, I'd be wrong. So they're doing really well. And I think what differentiates them is the way that they present to the customer. There's no fees. They don't have interest or they don't have late fees. They don't have prepay fees, annual fees, open and close an account fees. Those are things that the other guys do. What they do is they make money off of interest, and they make money from the merchant. So they make the merchants' products more appealing to buy because you have the option to pay over time in a very simple fixed interest, non-compounding way. And they do that because they're better at evaluating credit risk. And so that makes their financing options more sustainable, more profitable, and allows them to, again, differentiate from the easily replicatable buy now, pay later type services, which are really just all about hitting those fees and just aren't as attractive to customers. And so they're doing extremely well. Last quarter, their revenue was up 40% on a year-over-year basis. Their gross merchandise volume was up 35%. So they're doing really well, growing their brand, and they're really just kind of getting started. I mean, they've got the U.S. They're doing well in the U.S., but they're just now getting into the U.K. Going to use that as sort of a springboard into Europe, and they've got a lot of upside. So they're doing things right, and right now, the U.S. consumer, a lot of people are a little bit cash strapped, and this is an attractive option to them using these kinds of services, especially, again, with the Visa partnership. So everything that they're doing seems good to us. The only thing I don't like is how strong the stock is traded. I wish it was down a little bit more than it is so that we could have a more bullish rating on it. But it's still, good data, strong company, and differentiated from their peers, which I think is really important.
Landon, buy now, pay later exploded on the market a couple of years ago and then went through its adolescent hangover, right? When the joke was buy now, pay never. And that's the key. I think you mentioned it in your presentation, the credit risks, right? Obviously there's competition. That's going to be one thing, but Affirm seems to be, signaling themselves out as one of the leaders in this space. But the credit risk, right? Is that the biggest problem they have going forward, or is it competition, or what is it? They seem to be the most high-profile name. There's other names out there. Are partnerships important? What are the key things for this company to continue rolling here?
Yeah, I think that they've done a great job, and they've got to continue to do a great job at evaluating that credit risk. Obviously, you got to get paid. If you're fronting the money to the merchant, you got to get paid on the back end from the consumer. So they've got to make sure that they're picking good customers for approval on these types of things. And so far, they've done that, which has allowed them, again, to avoid all those little ticky-tack fees that just leave a bad taste in consumers' mouths. And so if you can, approve the good consumers, keep them happy through, a program that doesn't just bother them and annoy them with fees, then they'll come back next time, and you can have a good consumer base there. But yes, I do think the partnerships are very important. I mean, landing Visa obviously was huge, and so that's going to separate them as well. I really think that it's just continuing to saturate the market and dominate the space that they're in, because that's what they've been able to do. That's why they're trading so strongly. Again, you don't usually see 4 companies that are generally very similar, where 3 are all to the left on LikeFolio data and 1 is to the right. I mean, you just don't see that very often. So if they can get, a tailwind on the consumer trend, they're going to be crushing it. But right now, it's kind of, a mixed bag when it comes to how things are going, but they're still doing well. So them dominating, they're demonstrating that they're dominating their market right now, being the leader without that much of a tailwind from the overall trend, is a great sign that if it does turn around, if things do start to move back towards buy now, pay later, if that becomes a stronger part of the American economy, then, they're positioned to absolutely take advantage of that. So continue with the credit risk, analysis and more partnerships. And then again, expanding into Europe, starting with the UK.
Yep. Partnerships, Amazon, Target, Lululemon, Nordstrom, Apple Pay, Google Pay. So they've got all the big major, partnerships here, Landon. I get that part of it. But is this maybe, something about the economy in general, where consumers still spending, they have jobs, jobs numbers are pretty robust at this point, where if we see a downturn in consumer spending, that's when you've got to be careful on a name like this? Or is that when they actually take off even more because people are actually going to push off payments? It's like a double win for them?
Right. Either things are going really well and people want to spend more, and generally speaking, people like to spend a little bit above their means, right? I mean, at least in this country. So I think that's what makes this company so uniquely positioned, is that if things are going great, people are going to want to buy more. All their friends and family are buying more, and maybe they can't quite afford it. So, let's buy it now and pay later. But then if things aren't going well, they've got to buy stuff. So let's buy now, pay later. So it's kind of an interesting situation that they're in, a little bit of a win-win. I don't know what Affirm, if you had to guess what they're rooting for as far as economy, I would guess a very strong economy, strong consumers is going to be better for them. But you're going to have less people who are cash strapped, less people who need loans. But again, I think we can count on the American consumer to spend above their means and want to keep up with the Joneses and just sign up for these kind of services. So I like their position where they're at.
Yep. Dare to bet against the U.S. consumer. That is what we always say. Great stuff as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder at LikeFolio.